Bogdanab.
John Venn, welcome to the Deep Dive. This program, well, it extracts and explains the really important nuggets from the Seoul Economic Daily securities news. It offers you a crucial shortcut to being well-informed. Today, we're navigating a huge surge in market liquidity, some political drama around a major financial institution's election, and a pretty sharp crackdown on regulatory bad actors.
And just for context, as we kick this off, the KOSPI closed today at over 10.41. Now, that was a slight dip, down about 0.80%, 32.42 points. But while one day showed some profit-taking, the overwhelming atmosphere right now, it's this soaring level of activity. And a serious debate about whether we're entering a sustained liquidity rally. That's really where we need to start.
Okay, right. Let's unpack the institutional politics first, then. We're looking at the leadership battle at the Financial Investment Association, KOVUA. Our sources are reporting that the current chairman, Seo Yusuk, is, well, heavily signaling he wants to seek re-election. And the clearest sign, he actually chose not to attend the board meeting that was set up to form the candidate nomination committee.
Yeah, and what's fascinating here in this specific political context is that his absence, it's actually a power move. See, as the board chairman, if he'd attended that session, it could easily have been spun as election meddling, influencing the process. So his non-attendance, it's seen as a strategic step, making sure the procedural fairness is totally beyond question. He clears the path for his own bid.
And we know he's serious because he's also reportedly canceled an upcoming trip, a visit to meet Chinese big tech firms. That looks like a move designed specifically to head off any potential controversy, right? Avoid claims he's using an official trip for personal campaigning. If he does run, it'd be the first re-election attempt since Kofiat was set up. That really raises the stakes.
Absolutely. And if you look at his likely platform, it really centers on one specific legislative success: the introduction of business development companies, BDCs. This investment vehicle is, well, it's his big achievement.
But hang on, here's where I have to sort of challenge that a bit. Okay, the BDC was introduced. But the law, the one passed back in August, it specifically excludes securities firms from participating. So if we're talking real market impact, why should the industry really take a platform seriously that promises to include securities firms when the law just passed explicitly keeping them out?
But that's the critical pressure point. See, his platform isn't just about, celebrating that the BDC exists. It's about pushing aggressively to amend the law, to allow securities firms in. And this isn't just political maneuvering. It has huge implications for the venture capital space. Bringing securities firms in, that could potentially unleash massive new pools of capital into startup funding. It would fundamentally shift who holds power in that asset class, moving away from the current dominance of asset managers.
Okay, so the political fight is actually about the future flow of venture capital. That helps explain the intensity, yeah. Beyond Seo, we've got official candidates like Hwang Sang-yup and Lee Hun-sung, plus some other high-profile names rumored to be floating around. But when you connect it back to capital, the politics seem pretty simple. The voting power, it really rests heavily with the affiliates of the biggest financial and securities holding groups. Their interests are going to be key in shaping the outcome here.
Precisely. And speaking of key interests, let's pivot to the sheer volume of money flooding the domestic stock market right now. Daily trading value has surged to nearly 50 trillion KRW. If you look at the total value, that's the KRX plus the alternative trading system, next trade it hit an all-time high, 47.9703 trillion KRW.
Wow, that's nearly double the activity we saw just weeks ago, almost a 90% jump since early October. And this explosion, well, this is what's fueling the central debate right now, isn't it? Are we just watching, short-term overheating, something destined for a quick snapback? Or this is the beginning, the early stages of a powerful, full-blown liquidity rally?
Well, the initial data certainly seems to lean towards a rally, at least in terms of volume. We've seen buying increase across the board. Foreigners went from buying maybe 3 to 5 trillion KRW up to 8 trillion. Institutions, they doubled their participation. And individual investors saw the biggest jump, climbing from around 7 or 8 trillion KRW to a staggering 16 trillion KRW.
And there's that anecdote you mentioned, it's really telling. Captures the whole psychological shift, the fear of missing out, FOMO. It's so strong that bank tellers are apparently getting calls from older customers, people who traditionally hold safe assets, asking for tutorials on how to use mobile trading systems, MTS apps, that kind of panic to get into the market. And it's backed by this record high pool of cash reserves, the so-called dry powder.
Exactly, that dry powder, or technically investor deposits, it hit a record high of 81.911 trillion KRW. It's just a phenomenal war chest sitting there, ready to deploy. And that's the main bullish argument, really.
Okay, but let's look at the other side, because not everyone's convinced this is sustainable. Kiwoom Securities, for instance, is waving the overheating flag. They point out that this rally seems pretty concentrated. It lacks broad leadership across stocks, it's heavily focused on sectors like AI and semiconductors, and they worry about sharp profit-taking ahead of big global events, specifically the upcoming FOMC meeting and those critical M7 tech earnings.
And, their concern does seem validated by some selective selling. On the day we're looking at, foreign investors actually net sold 1.6379 trillion KRW. That's the largest net selling volume we've seen since way back in early April. It suggests that even while money is pouring in overall, some global players are definitely taking profits where they can.
Right. But then you have the rally optimists, like Eugene Investment Securities. They argue that the KOSPI's improved operating profit consensus, now sitting around 350 trillion, KRW fundamentally supports the index trading up here in the 4,000s range. And when you combine that fundamental support with, over 80 trillion KRW in dry powder and a lower margin loan ratio compared to those sort of bubble-like levels back in 2021, they believe any correction should just be seen as a healthy pause, an opportunity for staggered buying.
And that dramatic shift in sentiment, the flight into risk, is perfectly illustrated by what's happening over the gold market. I mean, if that much cash is flooding into stocks, it has to be coming from somewhere, right? And the data shows us exactly where that capital is bleeding out. It's the gold market.
Yeah, gold saw a really steep decline, nearly 10% in just 1 week. And even more significantly for the domestic market here, the kimchi premium, that gap where the local price is higher than the international price, it's practically vanished. For standard gold, that premium shrank from 8.9% all the way down to just 0.7%. Tiny.
Right. And this steep correction saw standard gold domestically drop from 210,000 KRW per gram down to 189,170. And consequently, gold spot ETFs, they dropped by 5 to 10%. This rapid normalization, it really confirms a strong, pretty definitive shift towards risk-on sentiment among Korean investors.
And the causes cited internationally seem to be the slowdown in U.S. CPI, plus growing expectations for future rate cuts there. Domestically, things like the KOSPI crossing 4,000, maybe general optimism from things like the U.S.-China summit talk, it all contributed to reducing demand for safe havens.
The World Gold Council is cautiously calling this a normalization, basically suggesting the panic buying phase is over. However, NH Investment in Securities, they're maintaining a longer-term view. They see this more as a healthy price correction. They argue gold's appeal as an inflation hedge, and, a safe haven asset remains strong, especially given ongoing systemic U.S. economic risks.
Okay, finally, let's turn to regulatory enforcement. This is sending quite a shockwave through the financial sector. The newly formed Joint Response Team for Stock Manipulation Eradication. They executed a search and seizure at NH Investment in Securities this week, targeting a senior investment banking executive referred to just as Mr. A for what looks like massive alleged insider trading.
Yeah, this is a really high-profile case for this new Joint Response Team, their second major one, actually. Mr. A is suspected of using non-public material information related to 11 separate public takeover bids. This was over a period of 2 years. And authorities estimate his illegal gain is somewhere around 2 billion KRW.
And the alleged mechanism sounds pretty sophisticated. It involved a network.
That's right. He's suspected of sharing this confidential info with colleagues and close acquaintances. They would then buy the target stock just before the public bid was announced, and then sell immediately after the price inevitably jumped. Classic insider trading playbook, but on a large scale. The investigation apparently uncovered frequent large financial transactions, suggesting a clear profit-sharing scheme. And alongside that, the sophisticated use of multiple, frequently changed borrowed name accounts, Chamyung accounts, all designed to mask who was actually buying and selling. This level of systemic internal fraud. It's exactly what this new regulatory unit was set up to combat.
It really sounds like the financial authorities are using this case to send a huge signal. But does the industry think the zero-tolerance policy will actually change the culture? Or is it maybe just high-profile theater, to demonstrate competence? The authorities are promising severe criminal penalties, administrative sanctions, too, against corporate and financial insiders who exploit this kind of information asymmetry.
Well, the commitment certainly seems serious this time, mainly because they plan to broaden surveillance. They're specifically targeting financial institutions and related entities that might have been regulatory blind spots in the past. And while, look, it's always a difficult battle to enforce culture change, the sheer severity of the penalties being promised now, coupled with this new unit's ability to coordinate enforcement actions, it suggests they're really aiming for a systemic deterrence. Not just, token arrests.
Keken the match more Augie, but me ploya. Sa Jaya. Hey, don't you think, Go and you saw, don't get it. I choose to keep on me, honey.
我要靠勇敢，勇呢，勇到勇动嘅勇動不要，當然呀，勇呢啲啦，但係我明勇嗰啲勇就我啲，就叫我，我啲，